Good afternoon, everyone. Welcome back to the Finding Genius video series. I'm here with David McDonough, who is the CEO of Commonstock. David, thanks for joining us.
Great to be here. Can't wait to chat.
So, Commonstock is more relevant now, more than ever, given everything that's been going on in the past few weeks in the public markets, which we'll get to. But Commonstock is a platform for friends and family to invest in the stock market together and coordinate their trades. The company recently raised a $10 million seed round with Floodgate and QED. I'm looking forward to talking. David, before we get into Commonstock and everything that's going on, could you talk a bit more about kind of the origin story and your time at Google and what the inspiration for Commonstock was and where you got the courage to actually leave the full-time job to start it?
Yeah, happy to. And I think actually to give the full context of the origin story, I'll rewind a little farther. I graduated, I grew up in DC. I graduated in 2008 into the financial crisis into, I guess, 2008, 2009. And I was going to go to medical school. All my friends went to work at Lehman and Bear Stearns. And I was actually, to save money for med school, became a squash and tennis pro in New York. And as the world started to collapse, these other tennis pros and I started an investment club. It was Team America Recession Police, or TARP, and we would meet in the pro shop. We got E-Trade cards, and we would analyze companies. I was the tech analyst. My best investment was buying Citibank at $1 because in reading through the quarterly reports, I knew that the government probably wouldn't let Citi fail. And it went up 10x in the matter of a month or something. I was like, oh, this is so easy. You just buy cheap companies and they go up. But really what happened was I was hooked on the process of analyzing companies, understanding how businesses work, diving into corporate finance, macro and microeconomics, basically just trying to predict the future and see who was the most correct. And so I scrapped medical school, went to work at a VC fund, called Greenspring Associates, did some tech investing. I just got an unpaid internship getting lunches, and because I hustled a lot, they gave me a full-time job. I also then taught myself to code, moved to Google to do some corporate policy and strategy, got better at coding, and then when Robinhood and Coinbase launched 2015-ish, I realized my friends and I were still bantering all day about public and private markets. And I had taught myself investing on the internet just by going to all the subreddits, going to all of the forums that existed. And I had been frustrated that anywhere I went on the internet where people talk about investing, it immediately descended into chaos and spam and garbage and pump and dumps, which we're seeing right now. And I wanted a way to solve that, a way to amplify the knowledge of actual good investors, to help people engage and participate in markets in the most healthy way and actually improve by following good investors. And I also learned as I watched Robinhood start to grow, retail is this massive market force that everybody seemed to be underestimating. And I started seeing Wall Street Bets grow, and I started seeing the investment subreddits grow, and I knew it was only a matter of time before this demographic either became like a driving force in the stock market or even realized the power that they wield, which ended up sort of really coming to the fore this past week. And so that's when I left Google in 2017. I built this hacky little site for my friends and I to link our brokerage accounts, our Robinhood accounts, talk to each other, share our knowledge, and get alerts when each other trade, see each other's portfolio by percentage, and just banter, share memes, share analysis, share our insights. And that's what Commonstock is today. It's a social network or a community linked to everybody's existing brokerage account where you can read the insights and investment memos of top investors. You can verify their portfolio and their performance by percent only. Everyone can link their brokerage from Robinhood to TD to E-Trade. And then I can banter with my friends and talk about GameStop, or I can talk about Peloton's earnings, et cetera. So the hope, to sum this all up, is how can we improve the world's financial health, by making investing more engaging and more informed, and hopefully amplify the knowledge of the best investors. And that if we can do that, have a longer-winded diatribe about the inequality in the world today, and I sincerely hope that Commonstock can reduce a lot of that inequality by just the way that investing changed things for me was not because I made more money, but because I now understood things like economics and corporate finance and business fundamentals, and that's kind of the goal.
That's helpful. I'll talk about that in a second, but could you talk a bit about you started this in 2017, and retail investors were obviously a huge part of the market, and Robinhood was capitalizing on that. But the theme in 2020 and 2021 was the surge and kind of the emergence of retail as a driving force in the market. What were you sort of predicting would happen? How did COVID sort of accelerate that trend? And what were retail investors really looking for when they were entering into the market that Commonstock is filling?
Yeah, great question. And it's important to have context, and I'm probably the perfect example, right? There's this wave of millennials and Gen Z who all bore witness to the 2008, 2009 financial crisis. And that became this, almost scarring moment for a lot of us, where after the fact, and even before, we're all told this is too risky for you, too dangerous for you to do yourself. Give me your money. I will manage this for you. And this is like the establishment of the traditional sort of method of self-directed, or retail is dumb money. Like they can't be trusted with the control of this. And what I learned, having done this myself, is, I am pretty thoughtful, and I love the process of learning. Like there's nothing. Certainly, there are small corners of this world that are more reckless, but in large part, retail investors have, even on common stock, the average portfolio size is $350,000 to $400,000. Like these are not 18-year-olds in their parents' basement YOLOing out of the money options. Yes, there's some of that, but when you look at Boggleheads and Value Investor Club, and all this world is really deeply thoughtful, intelligent people who want to improve and learn and analyze fundamentals and study macro trends. And yes, sometimes they share memes and GIFs, and they also look at things for entertainment. But since what I realized in 2015 was this market of retail was being vastly underestimated. And as it grew, I knew that this day was going to happen. I didn't know when. When Robinhood introduced zero commission trading, I knew that eventually the Schwabs and TDs and Fidelities of the world were going to have to compete, and it was going to drive down their prices to zero. I knew I could just see what was going to happen. It was like in the Matrix when the things turn green, and it's like, wow, I can see how this is all going to play out. It's like really corny, but I was just like, this is so brain dead obvious to me how this is going to happen. I don't know when, but it's 100% going to, retail is going to take over as this force. And I couldn't have predicted COVID, right? That everyone being stuck at home with zero sports was really an accelerant. And it was going to happen eventually, though. And, over the past year, watching things like Tilray and Kodak and Hertz, these miniature little waves forming. I wrote a comment and a memo on Commonstock months ago. It was like, has turned into the perfect storm of the free flow of information on social media, along with great democratized access to capital markets, which is a very positive thing for the world. These two things in concert structurally probably change the dynamic of markets in just terms of sheer volume. And at some point, there's going to be some sort of black swan event as a result, because with zero people in charge, there's like a pump and dump on a macro scale accidentally. And there's no bad actors. There's no like malicious intent necessarily. It's just, this is the memification, the power law aspect of these things happens where everybody floods into the same stock like Tesla, and it becomes a self-fulfilling prophecy. It's really fascinating. So
it is really fascinating. You're capturing it all on Commonstock. Before I get into Commonstock, sorry, just fascinating given what's happened. But do you believe that the Wall Street bet movement in a microcosm I mean, there's several of those happening at the same time on Discord and on TikTok and within crypto. There's different communities. But do you think these micro communities are kind of accelerating your growth curve at Commonstock? Do you see growth transfer from those platforms over to you, or do you think that hurts the image of retail investors and saying, we failed on Wall Street bets, we've now got to go to an institution for them to manage our money?
I certainly don't think anybody has feels like they failed on Wall Street bets. I don't think anybody actually expected to sort of topple any specific industry. It really is more, and this is what I was alluding to earlier, it's more of we just want like the respect and the appreciation that we deserve. Like we're this massive, and there is no, when I say we, it's like just this amorphous blob of non-professional investors of, hey, let us participate, right? Where it's okay if I want to allocate $200 to a hyper risky GameStop trade, and if I lose $200, I'm not like bankrupt. It's not the end of the world. I'm just part of this. I get to participate in this kind of fun movement. And for Commonstock specifically, we want to harness and focus the energy of all of this, but in healthy and constructive ways, right? And so left unchecked, I do think all of these discords and Wall Street bets are not healthy. Certainly the language is caustic and inflammatory and horrendous, and I don't want anything to do with that, right? I want Commonstock. Nothing has changed in our roadmap, right? We are still heads down, focused on amplifying the knowledge of the best investors. And we haven't done any, a lot of brokerages have done like this, land grab of, we got to get all the Wall Street bets participants. Like, all right, well, that's absolutely not what Commonstock wants, right? We're just going to continue to focus on a community that is elevated for signal over noise. And the people who are interested in that, which my thesis is the vast majority of retail investors, they will find Commonstock, they'll love it, and they'll continue to invite their friends. And that's the bigger TAM to me, right? And that's why we've seen hundreds of millions of dollars sign up in the past week alone. We've seen exponential growth, 110% plus month over month in the past 2 months. And so we haven't really tried to, like other brokerages have, try to snag this cohort, because ultimately that would dilute the quality of our community, and that's not good for our business. I think it's a lot of startups are emerging in this space, and they're trying to do these sort of shortcut growth hacks but I think to cheat their way to a top line growth, but at the sacrifice of engagement and value and retention, you're going to end up hurting yourself in the long run. And Commonstock seeks to just be, headstrong, focused on, let's just go after the larger market of intelligent, thoughtful investors. Because if Wall Street Bets is 4 million people, that other cohort is 40 to 400 million people.
So tell me about the Commonstock product itself. So is it sitting on top of your existing brokerages? I've used the beta and really enjoy it. And definitely interesting seeing what my friends are actually trading, and when they tell me an idea, at least it helps to know that they've actually invested in it themselves. But can you tell me a little bit about how it works? Do you place trades through Commonstock, or does it sit on top of your existing brokerages right now? And then I guess a little bit more about when you left Google to do this full time, what were some of those regulatory technical hurdles that you were facing? Because that pitch of saying, let's coordinate our trades as friends and family, is that something that the SEC, that you had to work around the language to better understand that it's not some of the hot water that other folks have gotten into recently? So just better understanding that regulatory and technical challenge that other fintech founders might have to think about.
Yeah, and I'll start with sort of the overview as you pointed out, right? Look at Commonstock as a community layer on top of every brokerage account, right? So think of it like the Bloomberg terminal isn't a custodian, it's not a prime brokerage. It's this terminal of news, data, and communication on top of all of the banks. And that's Commonstock, right? We are not a brokerage, we're brokerage agnostic. It's just the social layer on top of a Robinhood E-Trade, TD, Fidelity account. And that's important for us specifically because if you're building a community, right, the most important part of any network is its diversity. And why the reason that I wanted to build something that was broker agnostic, it was to get the supply side of knowledge, as I would say, right? The existing experienced investors. If you have somebody with $10 million in their Interactive Brokers account, they're not going to move all of that money into like a brand new brokerage account just to share it with their friends because they're used to these tools. And so being broker agnostic allows us to align incentives correctly, but more importantly to me is get all aspects of the investing community, right? The experts making, we have people making $100 million oil trades talking to people with $100 total portfolio. And the magic for me is that those two people both want to improve their investing. That the connection of those two folks is what is powerful to me in a community. And the shared knowledge, right, of this is why I made this investment, or this is my framework for analyzing a company, of the best software investor talking to a very beginner software investor. And so that's how the product works. We have an API that we've built. We spent 2 years not doing screen scraping, but building APIs directly with the brokerages for extremely high security, because trust and security is our priority 1 through 10 probably. And we don't store or save or see your login credentials. You log into TD Ameritrade like you would any other directly, and then they give us, through the magic of APIs, access to pull in your portfolio data. We never ever share dollar amounts, it's only percentages. But we have the ability now to validate and verify what people buy and sell in their performance. And so I can now see what my friends own, I can see their skin in the game, and I can build a better trust with both the FinTwit creators. I can see what they own. I can also see what my family and friends are buying and selling. And that's where, on the compliance side, nothing we're doing is any different than anything that exists, right? Where you're saying, hey, announcing to the world, it's actually a fascinating freedom of speech issue, which has come up in the past week. The government can't say that I, David, am not allowed to tell the world, I just bought Tesla because I think Tesla is a cool company that's going to solve climate change, right? There's nothing wrong with that. And as long as I'm not giving someone specific advice that says, hey, David, you should buy Palantir for this specific reason, then it becomes me giving somebody investment advice. And if I'm monetizing that, I would have to register as an advisor. And we don't allow that. We make sure that's actually not possible on the platform. And that's the main compliance issue. But other than that, we're just making it easier for people to trust that people are doing what they say they're doing, and hopefully preventing actually a lot of the downside of all these like scam communities, the like signals traders, join my trading guru chat where I'll make you a ton of money, is just garbage. And I want to save the world from that nonsense.
But would you ever consider going, and let me know if you don't feel comfortable answering this right now, because I'm giving away your product roadmap, but do you ever consider yourself going in that direction of saying, hey, the wealth fronts and Betterment said, you retail investors don't need financial advisors, we'll give you a product that you can invest in monthly and ignore it. But now is that we bring on financial advisors who have been doing this their entire careers, and now you can follow them on the platform, and they can maybe either see it as advice or you can just see their portfolios. Or on the other direction, would you start allowing folks to start placing trades directly through Commonstock?
So right now we do have, it depends on the brokerage, but we do have the ability to execute trades in your own brokerage account directly from Commonstock.
Okay.
So we built that API, and there are an enormous amount of possibilities that we can explore given that
Right.
that functionality.
That's interesting.
And I'll probably have to leave it at that.
Yeah, that's good. That's great. Could you talk a little bit about, so the product's in beta currently?
Yes.
And you've seen some pretty astronomical growth, obviously, based off of the round that you guys recently raised. Could you talk about maybe some of this is things that you picked up on some of the startups that you've worked on in the past or at Google, but could you talk about some of those growth hacks of when you first launched, what you did to get people to know and learn about Commonstock and then grow pretty exponentially from there with users putting themselves on the wait list for the beta product and actually testing it and sharing some of those results with you?
So one of the most interesting learnings, honestly, that I think is the most valuable, and I can't stress this enough to anybody starting their own, especially consumer social product, is that growth hacks and shortcuts are actually can be damaging, right? And one of the things that yes, there is, you want to build those, I would say, sharing loops or network effects into the platform. And so we built things. We didn't really do the Robinhood sort of waitlist growth hack intentionally. We didn't do a lot of the marketing growth hacks where we're trying to make a viral video. The thing to focus on for anyone building in this space is what are the aspects of the product that drive viral growth. And these are things like we have an amazing feature called follower value, which is initially the idea was it shouldn't be about the number of followers you have, it's about the value of those followers. And we want you to focus on getting quality followers. The same thing that we do with likes, right? Likes are based on the portfolio behind them, they're weighted. It's not one person is one like, right? And the follower assets example has created almost this status symbol where when people get to $50 million following them, $100 million following them, that's a really cool thing to share. And they will, on their own, share that externally on Twitter, on Reddit, with their friends. And so this is what I would call very hard-won lessons about organic growth. And we've had multiple opportunities in the past 3 months to do a lot of, we could spend $500,000 and we could buy our way to probably 1 million users in a heartbeat, instantly. One thing that I've learned, this temptation and this siren song, and as this market gets popular, watching other companies do that makes it even more tempting for me to the sweet, sweet siren song of just top line growth. You can pay any number of people to enter a room, but you can't pay them any amount of money to stay there and make connections and just hang out indefinitely. And so that's why being very disciplined and finding a way to just get people to come to your room because they want to be there, that is all or nothing. That's the entire name of the game. And that's what we've focused on doing, is building a organic growth network. And that's where, if you can basically, I was talking to a very famous VC in December, and she was like, hey, should I just buy 100,000 users so I can raise the next round? And she was like, please, whatever you do, stay out of your own way and let these organic community bonds form. Because if you flood the ecosystem with a bunch of randos, they're going to interrupt these organic bonds that are forming that are, by the way, the most powerful force on the planet. And if you just let it happen naturally, you'll watch this network effect compound, and you already have signs of exponential growth. Just let it continue, and the network will shape itself. And then you have a runaway train that's the most powerful thing on the planet. And so,
wow, that's really interesting. And what are some of those organic bonds that you've seen form within the product already?
One of our most amazing earliest user, Nathan Warden, has started created a market game, right, where everybody joins on Thursdays, and they join a Zoom, and they all pitch a stock for 5 minutes, and it's like March Madness for stocks. And we have people joining from Singapore in the middle of the night. We have hedge fund managers. We have people from Major League Baseball players, right? And it's just the most remarkable watching people come together to share their knowledge and just talk about markets. I joined one of these the market game pitch competitions. It was genuinely moving, because it's just strangers coming together around their love of markets and learning and improvement. And that's just so exciting, right? Another person, Christopher Seifel, is giving valuation classes on how to build like a DCF model, which is amazing. There are all of these groups that are forming organically that I get really excited about because it's people finding other genuine people and just loving, and that's this cult-like community that has formed. And it's just that once you have that magic, you can kind of turn on growth whenever you really want.
So, what are some of the milestones that you're trying to hit before the product is more broadly available and out of beta?
It's pretty straight. I mean, we are just we're still a small team. We're still trying to smooth out some rough edges. We just hired an incredible head of product, Brendan, who is, taken a lot of my garbage product instincts and made them more consumer ready. Shout out to Kent Goldman at Upside, one of our early investors who made that introduction. And he's already, it's been a month since he joined on January 4th, and he's already caused a tectonic exogenous black swan market shift. And so that's been great. But, it's small things like better onboarding, better UI and UX to link your brokerage. All of these things improve the product, better user discovery, better search, better content creation. Similar to Clubhouse, we are a creator-driven business where creators are kind of the lifeblood. They are the ones writing memos, sharing their knowledge, putting all the effort into insights and analysis that bring the entire community around investment talk. One of our creators just wrote the most unbelievable analysis of Apple's earnings report, and it's like probably like this is like professional grade equity research that is happening for free on Commonstock, and then everybody gets to jump in and discuss. And it's, I think, pretty remarkable to me.
It's really interesting. Could you talk a little bit about that fundraise? You've gotten some pretty incredible investors around the table. Can you talk about the process of going through that, kind of positioning the market to them, and maybe some of the detractors or people that didn't believe in the initial vision? That obviously it's gone well so far, but was it around defensibility, and would Robinhood go and build the social network around it, and some of the common obvious ones that I think probably a lot of investors just spit out to you, but it would just be great about hearing that fundraising process.
Yep. And I mean, it's an amazing story. We don't have to go too deep into it, but this was 2019. I built like a very rough V1 of the product, had great engagement. It was just chat without the growth. Got rejected from January to March by basically every investor because we didn't have like top line organic growth, and just to raise a seed round. And Mike Maples and Floodgate were the ones that, we are low on money. I had raised a very small pre-seed before that. I thought this thing was probably close to dead. In fact, at one point I liquidated my entire savings just to keep it alive, like stretch it out a little bit. And I was like, oh, I guess we're going big or going home here. And then met Mike Maples and the Floodgate team. And Mike said this last night, finding things where you can create a movement. And he was the first to see the movement that was forming behind this. And, sure, Robinhood could build it, but not really, as we're learning, because then it creates any brokerage that builds a community
right.
is going to be biased because every single person is using that, right? And you don't get the diversity. And so there's that. There is they saw that, and they saw, I think, into the future what this could be, not what that market was. And they led our seed round. And then in a matter of weeks later, QED, who I had already been talking to, said, look, we don't want to miss this opportunity. This is going to be a huge space. QED, Frank Rotman, Nigel are the fintech experts out of Virginia. They just know fintech better than anybody. And they said, hey, we know you just raised the seed. We want to be involved. and they added another chunk of money, which I will call a power seed, to aggregate into sort of give us this bazooka to really go big after this network.
It's great. It's helpful.
Um,
I know we're running up on time, but I guess just last like two questions is if people follow you on Commonstock, what stocks are they going to see you currently invested in?
I am the most basic, for better or worse. I've learned that I'm effectively like the retail whisperer, because I am just building for my own use case, right? And so I bought Tesla close to IPO. I bought Zoom
Wow.
at IPO. I bought Peloton at IPO. I bought Bitcoin early, then doubled down at the peak, sold a lot. That's another issue. But the way that I approach investing is I kind of like predicting these macro trends. And I'm not going through Tesla's earnings statement in 2015, understanding like I don't have an informational advantage over the professionals. What I do have, and what all of retail has, and this is why what we're seeing, which is so fascinating, is every retail investor is like, oh, I love my Peloton bike. All my friends love Peloton. I love the instructors. I'm going to buy some Peloton stock. The same thing happened with Nike. And, it's this purchasing power of retail is actually, driving these narratives of the stocks that they like to use, right? And the companies that they like everybody's on Zoom. Of course, everyone's going to start buying a Zoom stock. It happened when Nike backed Colin Kaepernick. We saw what I would call economic activism. Myself, I want to put my money where my mouth is and vote with my wallet and buy some shares of Nike just to let them know I like what you're doing here. This is great. And I think that's a really cool new phenomenon where normal people get to vote with their wallet, to back the companies they believe in.
And do you believe the Wall Street Bets movement and these other micro communities, once people are back at work, and kind of have other areas, maybe sports are back on, or the GameStop revolution maybe moment, do you think all this continues, or does it fizzle out and kind of come onto platforms like Commonstock where they can also have it in more constructive conversation?
I think it continues. I think one thing that people don't necessarily understand about markets specifically is once you set up a brokerage account, you don't generally like churn and just forget about it forever, right? There might be times of volatility or a correction where you are a little pulled back. Even in 98 to 2001, the retail explosion of the mid 90s, followed by the tech bubble popping, people might have stopped for 6 months, but then they go right back into it, right? You literally have a compounding chunk of money that's sitting there, and you'll go back to it, and you kind of have the hooks are set. And so yes, when sports are fully back in swing, when people are back outdoors, will it be will it grow quite as fast? Maybe not. I certainly don't think, short of a massive geopolitical shock like a prolonged depression, this is what happened in March of last year. This massive dip didn't scare people away. It flooded people into the market. That's when you want to get more active. That volatility is even better. Like I'm a perfect example. I got started in the midst of the chaos in 2008 and 2009 because that's the best time to start investing. So I actually think that's the common misconception, that people will get scared off. It just isn't what happens.
That's really interesting. David, thank you so much. This was very interesting. I appreciate your time.
Likewise, great chatting. I do hope things calm down a little bit because I need some sleep. But it's been a fun, wild 2 weeks. So great timing.
Yeah, well, congratulations on everything. I appreciate it.
Thanks so much. Have a good one.